In the metals quadrant today, taking a look at the June gold contract, pushing up toward 1800 again today. Pretty balanced in terms of change on the day at the highs and the lows, but showing moderate strength since the breakout above 1760 on April 16th. Gold is now basing above 1760, testing it on the low side of things for the last 3 days. Today we had a low of 1763.50 and then bouncing up from there, or at least holding. Yesterday we had a negative day, but it held above 1760. So that's a pretty big technical indicator showing that's the new support level as we kind of drive higher off of the double bottom that triggered, as I mentioned, a couple days before that breakout above 1760. So that's the level that's being tested, and the basing continues above that level. Now, yields are dropping again, creating a tailwind along with inflation expectations. Inflation expectations have not dropped, yet yields have. Not just from the 177 high that we saw, about 10 days ago in the 10-year, but from the 160 or so settlement that we saw on Friday. We're now down to about 158. We got much lower than that yesterday, but again, rallied back up to 160 and dropped again today. Not just nominal yields, but real yields. So that's showing that any sort of blockade from yields rising, stopping inflation, is not in place right now. And we're seeing commodity strength again as copper renews its move back up. We heard from Procter & Gamble this morning in their earnings call that they're going to be raising prices to consumers based on rising commodity prices. So the inflation outlook still seems to be strong, potentially growing, and yields are not counterbalancing that. So the need for an inflation hedge like gold seems to be finding its way into people's investment strategies. Now, on top of that, physical demand is still growing. While GLD, which is the ETF that had the largest assets until recently, continues to lose those assets, Bloomberg is reporting that the ETF's holding has shrunk by a fifth. Physical gold imports to India, who is the second largest consumer in the world, rose in March to the highest monthly total in nearly 2 years. A pullback in prices heated up demand during the wedding season in India, which continues through July, where gold is considered a very favorable, very popular gift for that particular season. So there's always seasonal strength in demand from India this time of year, but it's particularly strong right now. Now, Bloomberg reports overseas purchases rose more than sevenfold to 98.6 tons, up from 13 tons in March of last year. So physical demand offsetting the weakness in the ETFs, giving that gold contract another little bit of tailwind.